What's up, everybody? Thanks for watching. This will be a recap for Monday, August 17th. I know today was kind of tricky for us. It was tricky for most people, but I'm going to give you guys and show you guys the most significant price runs of the day, okay? Pay close attention because it's all going to make sense. All right. Price looked like this around 9:30 open, okay? I assumed that the damage was already done. We have original consolidation over here from the market open in the form of equal lows also. In order for it to be a valid original consolidation, you need to see them retested, which they do so here. Distribution, reaccumulation, redistribution, smart money reversal above the highs. Manipulation is always done very, very quickly. Does that look quickly? Yes, absolutely. And then we break back down. We have opposing sell side here. If we were to zoom out to a 5 minute time frame, excuse me, not the five. Which time frame was this? Let's go look. Not the three, not the two. Was it the one? 10, 3, 2, 1. No, which time frame was it? Was it 10? Yeah. All right. So here's your original consolidation. Then we retest it, we expand, we trade above last Friday's high, we come back down, then we run out the highs again. Here is your smart money reversal. Here is your low risk sell right here, in my humble opinion. You have the last up close candle with the big wick, bearish displacement, bearish engulfing. There's your 10-minute bearish EOB, low risk sell, stops will go above that swing high. And then you would look to target the original consolidation, left side of the curve. Just like my video from yesterday, and that I've been teaching a lot lately, is when you have your swing high, if you believe that's going to be a swing high, then you can draw your vertical line in the middle, which is going to delineate your bullish side of the curve versus your bearish side of the curve. Now that we are on the bearish side of the curve, you look to target original consolidation. We have the new week opening gap right here, so on and so forth. So right now, we're on the sell side of the curve, right? This play occurred before market open at 9:30. It's 10 after 9, and we had already fulfilled that target. So when we arrived at price this morning, we were a little bit confused. We do know the higher time frames are bullish, but today's Monday, the first day of the week. They don't have to just start trending higher right away. A good way to tell is by looking at the 4 hour. Does the 4 hour look like it wants to trend higher? To me, it doesn't. It does not look like they are ready to trend higher on the 4 hour. Go to the hour. Does the hour look like it wants to trend higher? Not at the moment. We've already ran buy side several different times. Anywho, moving on, we're on the sell side of the curve. I teach that the midnight opening range is a very, very, very valuable and important level. So let's slap that on there. Here it is. This shaded box is the midnight opening range. Before we do that, let's go look at all the bullish PD arrays on this buy side of the curve that was used to push price higher. You ready? Here's a big fair value gap here, but they did not use that to bring price up. The one that they used was right here. They dipped into this bullish fair value gap to bring price up on the buy side of the curve. You see that? Then we get the push higher. Here's your change day delivery, 10-minute bearish EOB. Most people are going to be too scared to enter there. It's at 7:40 a.m. in the morning, so I wasn't around price when that occurred. But if that showed up at market open, yeah, that'd be a really, really good trade. So now we're on the buy side of the curve. We come all the way down. Oh no, today's already unfolded. Market open at 9:30. We spike up into a 10-minute bearish fair value gap on the sell side of the curve. What blends with that bearish fair value gap? Look left. Let's take our old bullish respected fair value gap and extend it out in time. Look at the precision on that when you're trading the curve. Those are the good inversion fair value gaps that I believe ICT is keeping hidden. There's a very, very specific phenomenon with the gaps I'm using. The gaps that I'm starting to teach and starting to look at here lately, is the previous respected fair value gaps. I'm not going to use this one here as my IFBG because it was never used as an FVG. I want to use the one that was used as the FVG, which was this one. Look what price did at the market open. They trade up and manipulate higher, straight on up to that one. But it's also a bearish fair value gap from the sell side of the curve. Put on the midnight opening range, smart money in the algorithm, they're going to get their best priced entries at, near, or above the midnight opening range. Look at the reaction and look at the body closure around this midnight opening range. We stabbed up above that range for a split second because they don't want people pricing in at the best price possible. That's why they spend very little amount of time above there. Moving on, we shoot lower. I don't even remember that happening. Yes, I do. Okay, this was the quick New York sell-off to hunt out this low here. I was confused on stream this morning. I had no idea what they really wanted to do. It looked like it was just super, super sloppy, right? But this was the trade that they offered to run out the low at the early from what was it? Like 9:35. We spiked up in there. Then they brought it down, came back up, and an opening range retest, and then made a new low. Okay, that's a scalp you could have took. But price is overall ugly. After running that low, what do we have down here? Here's a whole different fractal setup. IFBG, but it's also a rebalance of the bullish candle, and then we shoot on up higher. This was the long that I took that you'll see on my Instagram reel. I noted this gap right here because I am overall bullish, right? So I knew buy side liquidity was rested above these highs right here, specifically that 930 high. We have the down close candle that fills in this gap. Down close candle, big wick, bullish engulfing. I scalped this long right here. When we open, power of three, rebalance, just to run out these highs. And then I was covering above these highs up here. And then I had a partial that ended up getting stopped here. Once price, I knew we probably weren't going to trend higher. So I was on standby for more shorts. Okay. So if we clean everything up, I was anticipating them to pull back into this range. I'm still not 100% sure what they want to do, but it was at the 1150 macro, which is right here. We break back down into the range, come back up. There's another midnight opening range retest. That's where smart money is engaging. But I had to remind myself which side of the curve we are trading on. We are on the bearish side of the curve. Okay. So I took these shorts right here that you'll see on my Instagram recap coming off the midnight opening range. How did I anticipate this to unfold? Well, I went to a 30-minute time frame. I noticed that we edged this 30-minute swing low equal body. Those are inefficiencies. Price treats these as equal highs and equal lows. We came down and did not fulfill that, and then pulled all the way back up for the 12 p.m. open. So from 12 p.m. to 12:30, it's a new 30-minute candle. This is right here where I took my shorts. Here's the midnight opening range. It's the 1150 to 1210 macro. We're on the bearish side of the curve. We've already taken out a bunch of buy side liquidity here above the 930 high. Up close candle, big wick, bearish engulfing. Right at the 12 a.m. opening price, which is this red dotted line. They print a 1-minute bearish EOB right there. I didn't take the entry here. I missed the entry here. But that was a beautiful entry. You could have put your stop literally right there. That'd be your risk. And then we displaced lower. I entered here when this candle opened and traded up and stabbed into this bearish fair value gap. That's where I took entry. Targeting these equal lows here and targeting the low here and then targeting this black line, which again is the 30-minute swing low equal bodies. This is one of my targets that is unique to me. Not a lot of people know how to use them or anticipate them, but I'm in this trade anticipating this exact 30-minute candle from 12 o'clock to 12:30 to fulfill this level. Go to the 1 minute time frame. I want to see bearish arrays come into the market. What's the very first bearish array? The 1 minute EOB inside of the midnight opening range, coming off the true day open, which is 12 a.m., that red dotted line. That's a beautiful reaction right there. I'm getting in on the very next bearish PD array, which is here. If you look left, it's also an IFBG, which I don't give two shits about, to be honest, but I'm sure you do. I'm entering off the bearish for value gap. What's price do? Comes all the way down. I took partials under these lows, held my runner. It took a while, but we accumulate, and then we get that breakdown and fulfill this target right before 12:30. So I wanted that target to get hit by 12:30 because it's a 30-minute fractalized target and trade. And then we fulfill that, and then I got out. But moving along, what ends up happening? They go even lower. And now here I am. Oh man, I should have held onto that trade. Well, I didn't realize this, or I did, but I just didn't care because my New York Open session was real rough and I was just already over it. But I did take these shorts. You can go on my Instagram and see those shorts. Where is some more targets? So most people are going to look at, oh, the daily low, or these lows, or this low. I like to have these advanced targets. If you go to a 5 minute time frame, what do you see here? The same type of target I just targeted, but on a 30 minute. This is on a 5 minute. Swing low, equal bodies with the wicks. Those are draws on liquidity. We're on the bearish side of the curve as opposed to our intraday session, right? These are bearish targets. I should have held a portion of my trade to target that level there. If we zoom out to a 10 minute time frame, what do we have? Swing low, equal bodies, big wicks. Here again. So we have the 10 minute and then we have the 5 minute. Those are bearish draws on liquidity. Are we already respecting bearish PD arrays? Yes. Every one I just showed up here. What do we have right here? We have a bullish candle, big wick. The next candle opens up, trades up, fills in this little gap right here. They respect that little tiny gap, and then they displace and engulf lower. There's your 3 minute bearish EOB right here. You could take that short, target these two black lines here. Or if you're feeling froggy, target a new daily low. If that's going to play out, you don't want price coming up above the most recent respected array, which would be the gap, preferably the EOB high, which is the bullish candle. Let this play out straight down to these two black lines. Boom. That's where I did take this trade, to be honest with y'all. I did take this trade, but I didn't record it. And I used very, very low leverage, so it's not going to be in the recording. But I did take this play and I got out inside these two black lines. And then what's price do? It goes even lower. Oh man, I should have held, right? I can't think like that, but holy smokes, it went way lower. Yeah, I should have held. Beautiful delivery, of course, during lunch. But yeah, this is how I view price today. That midnight opening range is one hell of a range. Support and resistance, guys, I tell you what. So to wrap all this up, I tried two trades during the market open for no reason. I didn't see anything convincing. I had just no discipline, FOMOing into trades off the market open. And I knew all this stuff was there. Anywho, nothing is familiar. I'm not familiar with any of this, so I should be on my hands right here. This is all just BS. Wait for something familiar. We take out the low, IFBG, rebalance the bullish candle, then we start trading higher. Long story short, I took longs, right in here. Got the run on the highs. Price comes back down. I take the shorts in here to target this black line here. And then I took another short inside the 3-minute EOB here, right here, and targeted these two black lines. And then I was done. I should have held it because look what price did. It dropped another 100 points. So yeah, that's today's session recap and how I view price. Hope that helps. See you.